Hello, welcome to Easy and Simple, the plain and simple way to follow the U.S. stock market. Here's a quick breakdown of the U.S. stock market on Wednesday, February 7, 2024. U.S. equity markets rose on Wednesday amid earnings reports and debate over the timing of interest rate cuts. The S&P 500 closed up 0.82%. The Dow closed up 0.4%, and the Nasdaq closed up 0.95%. The S&P 500 set a new record at 4,995 points, closing close to 5,000 for the first time ever. Now, it only needs to go up 1% tomorrow to break through 5,000. But will it do so with ease? Or will the symbolism of 5,000 get in the way and prevent it from breaking through near-term resistance? The next thing to watch on FedWatch is the possibility of no rate cut in May. At 30%, there is now a 3.4% chance that the Fed will leave rates unchanged in May, down 3.4% from yesterday, but still higher than the 4.9% a week ago. Boston Federal Reserve Bank President Susan Collins, a member of the Fed, has consistently stated that a rate cut in March is unlikely, suggesting that a rate cut will come later in the year. As a result, the 10-year U.S. Treasury yield has been stuck around 4.115% for several days now, showing no signs of coming down. It's a shame, because it would have been nice to see it come 0.8% like it did last week, which would have given the Nasdaq small-cap tech stocks a little more breathing room. Looking at the Finviz heat map today, it's pretty green. Microsoft up 2.11%, Apple up 0.06%, Google up 1%, Amazon up 0.82%, Nvidia up a whopping 2.75%, and Meta up a whopping 3.27%. Tesla up %, AMD up 1.82%. So it was a very good day for the Magnificent Seven. About two-thirds of the S&P 500 companies have reported earnings this earnings season, and, on average, they've beaten Wall Street's expectations. Let's take a look at today's earnings announcements from major companies. Disney announced that its first quarter earnings beat expectations, narrowed streaming losses, and raised its dividend by 50%. The news sent Disney's stock up more than 6% in after-hours trading. Disney is also eyeing the future of sports streaming with its partnership with ESPN. Warner Brothers, Discovery and Fox are also teaming up to launch a new sports streaming service. The service is expected to include about 55% of U.S. sports rights. ARM, which made a hot IPO on the Nasdaq last September, also reported earnings today. ARM is a British semiconductor design company that has a dominant position in the CPU architecture market for mobile devices. ARM reported very strong earnings, jumping 5.5% in the pre-market and over 32% in the post-market. Along with the strong earnings, the company's performance in the data center market was notable. Green energy company Enphase Energy ENPH also reported earnings today, surging nearly 17% in pre-market. The company, which has seen its stock decline throughout 2023 in the face of steep interest rate hikes, jumped on the excitement as it raised its outlook for 2024 and forecasts strong demand. I own a green energy ETF, so could we be seeing a spring in the green sector on the back of lower interest rates? Chinese company Alibaba, a Nasdaq heavyweight, also reported earnings. I was skeptical that Alibaba would be able to show good results given the recent economic slowdown in China, but it did. Alibaba's stock price dropped more than 5% on the news of the revenue miss. I got bitten by the bug in October 2020 at that high and got out in 2021 with a stop loss. But I'm afraid I'll never go near Alibaba again. Meanwhile, the troubles of local bank NYCB New York Community Bancorp have once again raised concerns about the health of the local banking and real estate sectors. Moody's downgraded the bank's rating to junk, and several analysts lowered their price targets with warnings of governance risks. Despite the news, NYCB's stock price rose 7% on Wednesday. In NYCB's case, it's not just one regional bank's problem, but rather the problem of regional bank failures driven by high interest rates, a recessionary bellwether leading to commercial real estate and home loan losses, which some hope will act as a catalyst for the Fed to cut rates sooner rather than later. That concludes our core analysis of the U.S. stock market for Wednesday, February 7, 2024, and we'll be back tomorrow with the good news that the S&P 500 has broken through the 5,000-point mark. That was it for today, plain and simple. Please subscribe and like. Thank you.